Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and we got to get started on our analysis. But let me grab my just a bias chart really quick. A couple of things. Good morning to you, Alan. Hope all is well, Alan. And let me make sure I got this correct. Alan, are you the Alan that hold on. Okay, sorry about that. So, Alan, are you the one that Jethro was talking about, who introduced us to him? Is that correct, Alan? Make sure you're the right Alan. Just double checking that. And he had mentioned your name when I met him in person and had a couple of drinks with him last week. So just want to make sure you're the right guy. George, no, not George. Mario said WikiLeaks will publish 100,000 documents regarding Erdogan's corrupt government, the Turkish government, and I heard about that. That should be really interesting. So that will be interesting. Okay, let's go into the charts, and let's start off with the euro dollar. And you know, the euro is creating a little bit of a hammer here. Oh, overnight, if you guys missed it, if you guys missed the New Zealand CPI, that came in a little weaker than expected. The Kiwi got hit overnight. It's kind of recovered a bit, but there's no follow through in this market. This market's really it's pretty lame, frankly. But this late in the day move that you saw in the euro dollar was due primarily to the Turkish news, and it pushed the euro late in the session. I mean, like I said, I was saying earlier to Paul, that all happened. I was taking a nap. It was like 15 minutes before the stock market closed, and I said, I'm done. I'm just, I was tired, and I laid down, and I wanted to get up an hour later and just wrap everything up. So when I got up, the market actually closed because I took more than an hour nap. I got up, the market closed, and I heard about the Turkish coup. And a lot of this move that you saw was like late in the session, like, as the stock market closed. Then after the FX market was still open, but the equity markets had closed, and you saw the euro came sliding down. We recovered a bit, and just looking around, it's like, okay, well, the euro dollar could recover. I don't know how far it's going to go, but I wouldn't expect much out of it. Actually, 10.85 is what I'd be looking for today. If we can get up there, might not be a bad area to be on the short side, just from an intraday trade. I'm with Paul though. I agree that I have euro cross longs, so I'm long the euro Canadian down a little bit. Like I'm down 10 pips. I'm long the euro Aussie. I'm down 20 pips in the euro Aussie. I'm long the euro New Zealand. I added to it last night. I'm up like 60 pips right now, sitting in that trade. And I'm just in some of these euro crosses. I'm not long. I have a couple of dollar trades going on, but overall, and I'll talk about those here in a second. Overall, I'm long euros at the moment, so I wouldn't mind if the euro pushes up here towards 110.85. I wouldn't expect much more than that though. 10.85 and support, as you guys know, it's like a 110. This is major support, and I don't see any reason for us to crack that today. Not ahead of the ECB, and I agree with Paul that the ECB is probably going to save their powder. They're not going to initiate anything new, not with the Bank of England keeping rates unchanged. So I should keep it bearish because it is Come on, stop. Okay. That should turn red. It's still bearish while it's below 112. Okay. Still bearish below 112, but I think we could do some backfill, and I don't see any reason for the euro to break down right now. I don't. Does that mean it won't? No, but I just don't. There's no real reason for the euro to break down at this moment. So I think if you want to play it, you know, in the range, you could probably play it back to the long side a little bit. I'd rather play it to the long side down there at 110. I just don't even know if we're going to get down to 110. Let's go over to the cable. All right, here's the pound. Now, I bought the pound on Friday. I own it, and you guys, I own a small position, nothing big, but I bought it on Friday at let me look at my price, 131.64. If you were on the Lunch Money webinar with me, so up almost 100 pips, I picked up the position. Now, it's a small position, but I will tell you this, if we are developing this inverted head and shoulder pattern and the pound breaks through 135 for some reason, like it actually starts to play out, I will add to the pound. If we get up to 135 level and we fail, I will exit. I'll just take profits. It's just a small position anyway. It's about the smallest position I could possibly be in for me. And so, you know, I'm just kind of playing the, if it is going to develop a right-hand shoulder, that's fine. Now, today, I don't think we're getting to 135 today. I do not believe that at all. And let me remove that. Let me remove this. Let me remove this. Today, this is going to be resistance right through here. You can see that. So I'll just mark today's high, which is 133. Getting that out of the way. So 133 will be today's resistance. And it is still bearish. That's why I'm trading a very, very small position in the pound dollar, because I know it's counter trend. I know the only way this thing's going to make a break is going to break out is above 135. I'm very, very well aware of that. That's why I'm trading a small long. It's nothing aggressive. I'm just trying to trade this pattern here. And I mean, if you look at like the you know, how long it took to build this shoulder here. Oops, damn it. I didn't want to do that. Let me delete that. I didn't mean to grab the whole, I didn't mean to grab the, okay. And we could build this shoulder for a while. You know what I mean? Like this thing could build out for, you know, next couple of days. So there's no need to be aggressively bullish here. You know, we get above 135 and you might want to step on the gas a little bit if you're long, you know, and that's the way I look at it. Take a small position. Breaks through this 131, I'll just get out, you know, just below here, and you know, if it makes it up to 135 and fails, I'll just sell it and, you know, look for eventual break above 135. Maybe we get it, maybe we don't. Okay, so support, I'm going to have to mark this low, which comes in at 131.20, or no, it's 131.04, which is basically 131. Now there was a buyout. There was a big buyout between SoftBank, which is a you know, Japanese bank, to buy UK's ARM, and that could have been the source of a lot of the cable strength this last week. You know, so that you know, when you have an acquisition like that, so that could have been that source of the cable strength last week. Just keep that in mind. You know, it may end up being, you know, just more of the acquisition flows that we're going through. SoftBank, you're right. Actually, James is right. James says SoftBank is not a bank; it's a tech company. That's right. It is a tech company. It's also 3 o'clock in the morning here, but you are correct. You're correct. And that acquisition is what I think drove some of this um, um, order flow that went through here. Okay, and that's why I don't know if we're going to get any follow through to the upside, or if we do get any follow through to the upside above 135, it'll be very limited. Okay, where am I at? Pound. Let's go over the Swissy. Whoops. Here's the Swissy, and the Swissy has been, we were capped by this harmonic pattern, this Gartley, and we pulled back as a result. And we pulled back to a 618, which would have been pretty realistic expectation to come out of that move. I don't see any reason to trade the Swissy at this point. You break above 99 cents, then it's going to be a pretty bullish breakout. It's time to get long. Move below the 618 here, and you're going to see a much deeper pullback in the Swissy. I don't see anything to do or any reason to trade at this moment. Maybe a move above 98.50 could get a nice bullish breakout, but back up to 99 cents. But doesn't look like there's any reason to be on the to be trading this pair at the moment. $97.65 is support, and actually 98.50. I'm going to put 99 cents. We're still in a range. Here's the dollar yen. So the dollar yen, the reason why it's up, and you go, wow, it's up 84 pips today, or 89 or whatever the hell it's up. It's up 90 pips. It's really just because it closed so weak based on that Turkish news. We just rallied back, and you can see if you remove that red line, that red bar, it's basically just, we're just kind of recovered back to prices that we were Friday before the market closed. Now, the one thing that you have to note about the dollar yen is you have resistance, support, resistance. This 105.50 area is huge. We have overshot it. Okay, before we overshot it, a couple of weeks ago. We ahead of Brexit, we have recovered last week, but the spikes up have, we haven't been able to hold a candle above there. This is big resistance, guys, very big resistance. I don't think it's a bad idea to be on the short side of the dollar yen here. I'm not on the short side of the dollar yen, and if you decide to short the dollar yen, you have to risk above these highs that we posted on last week, which is 106 whatever. Right here, 106.30, is it maybe? Yeah, right there. But if you want to be on the short side, that is your risk. And when I look at this move, okay, which I might actually get short some dollar yen. Actually, I haven't done so yet, but if you get short the dollar yen, I mean your risk is above there, and if you look at what your reward is, your reward would be somewhere down here. You have a pattern failure, a flag pattern failure, and maybe you make it down to 103.30. I mean, shoot, I might even talk myself into getting short the dollar yen right now. I'm short some at 67. But you have to put your stops. which I'm doing right now. You have to put your stops above, 106. This thing's moving so slow. Let me just type it in. You have to put your stops above 106.30. Oops. Right, which I did. Okay, and as long as you know what your risk is, your risk is above here. We get back down to 103 and change. You probably want to cover that. And like I said, I don't mind being short the dollar yen here at all. Could we go higher? We might be able to, but I'll write down 106.30 as resistance. That's key. Support. Would have to take the spike low following Friday's news, which is 104.60, right? And I know I had us bearish last week. I had it selected as bearish because we were below 105.50. Actually, as long as we keep closing below 105.50, I'm going to keep it as bearish. Now, it's still early in the day, so we're above 105.50. I'm obviously very aware of that, but it's also very early in the day, right? Okay. Let's go over to the dollar Canadian. Here's the dollar CAD. We are stuck in the middle of this silly triangle, right? Okay, we're like right in the middle of this triangle. In my opinion, there's nothing to do with the Canadian, but I'll tell you the thing about last week is we were rallying in crude, and the dollar Canadian was not going lower, and that's something that you have to pay attention to. All right, now this capped us last week, right here, okay, and that is just below 130. So what I'm going to do is I'm going to mark up 129.90. If we break that, we're going to squeeze 1.2990. Frankly, I hope we break it too, because I'm long the EURCAD, so I hope it does break out. But we are in a range. Now support will be right here, and this is the place, if you want to be long the dollar Canadian, this is it. You come down here, and then you let it break just below there, and then boom. All right. So this is 128.30, 128.25. Okay, that's going to be really key support on the way back down. If we can get it. All right. Let's go over to the Kiwi. Now the Kiwi got hit last night with the weak CPI data. We've seen a bit of a recovery. I mean, this is like it just gapped. We were trading at 71.50. We gapped lower, and then just ran. And we've had a decent recovery. I'm surprised the Kiwi has recovered as nicely as it has. But if you look at last week, okay, we basically hit this support. Here, let me get rid of these fibs. I can get rid of this one. I can, okay. I can get rid of this one. Get rid of that one. I can get rid of this one. Okay. And this is the chop suey we're dealing with right now. So, thing I don't like about this, and I traded it to the short side last week. We played this double, triple top, whatever it was. There's your sell zone up there, if we can ever get up there again. The thing that I guess we should recognize right now is that this is a false breakdown, right? That's a false breakdown, which means that we could recover more. You know, how much more? I don't know. I mean, but given the fact that that we had a little false breakdown here, we might actually get a bigger recovery than anybody who's short the Kiwi would want. And I am short the New Zealand dollar, by the way. I'm long the Euro New Zealand. Okay, and so I more than anything, I'd love to see the Kiwi crap itself and just continue to fall. But I won't ignore the fact got a false breakdown overnight. So a 38% retracement is in very close proximity to this number here, that previous support right there. That's a 71.70. I don't know if we're going to make it all the way up there, but hell, if we make it up there, I would be more than happy to short up there. 71.70. Okay. I believe we are still in a range. As much as it sucks to be in this range, it is. Now, also, one of the other things that I have to point out, we are, this is the, see this big trend line here? We basically hit it, right? We hit it and bounced off of it. It's a big deal. I don't know if you necessarily want to be long the Kiwi, but being short the Kiwi, like the New Zealand dollar per se, is a little dangerous because of this, that we hit and retested this trend line. Look, I don't mind being long the Euro New Zealand, because if the Euro or if the New Zealand bounces, that's fine, as long as the bounce in the Euro is more aggressive than the Kiwi. Then the Euro New Zealand is going to go up. So, but if you're short the New Zealand US dollar, like cross the major that we're talking about, you got to be careful here. Okay, you got to be careful. Now, support will be 70, whatever the low was overnight, 70.67, so 70.70. Okay. And I would rather just sell a rally back to 71.70 if we can get it. Okay, I'll be back in a few minutes. You guys don't go anywhere. We'll continue on when I get back. Thanks, everybody. And Alan, you might not have been around when I said this, but Alan, is this the same Alan J that introduced Jethro to us? Just curious. Alan, I'm not sure if you might have been, not sitting down. I mentioned it when I came back from break. You might not have been around listening. So just a quick question. All right, I'll be back in a few minutes. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Let's go over to the Aussie dollar, and I'm short Aussies. I'm short the Australian dollar, and I shorted it on Friday. I'm still short. Hasn't moved much. We had a false breakout to the upside. You guys might have recalled this. I actually posted a pattern in play for Forex Analytics. Let's see. Let me show you. Aussie dollar. See, we have a pattern in play. Entry area is 96 or 76.15. The 76.25. I got short. I personally got short at 76.05, 06 actually, 0.056. So 76.05 and 0.6 of a pip. I got short that on Friday, and I'm still short. Target is 75.15, and it invalidates above 76.85. Now, the reason why I shorted that is because of the false breakout here. Okay, so that false breakout above the high should lead to a breakdown to 75.10, which is the 618 retracement of this move. All right, now let's get rid of this. I don't know where all this came from, so let me remove that really fast. In my opinion, we might be flagging like this, something or rather. I'm just kind of drawing it something like that. Okay. We may continue to drop here, I think, off of the highs and do something like this. Why can't I grab that? It damn near pissed me off right now. All right, there we go. All right. So I think it might be flagging, doing something like this, but I'm not too sure. I'm just kind of guesstimating here. But this is the sell zone that I drew out on Friday of last week. Said, hey, any move up here, get short if you can. I'll stick to that. So 76.10, if you can get it. And support will be Friday's lows, which would be 75.55. That was after the Turkish news. 75.55. Okay. And although I'm bearish, but we are still at the up. We're still in a big range. I mean, if you look at the daily, we're in a big triangle, right? So that failed breakout to the upside should lead to a breakdown and push us back into the middle of the range. That's really the trade I'm taking right now. I mean, it's not like I shorted the Aussie and I'm looking for a move to 68 cents right now. No, that ain't it. If we can get back down to like 75 and change, like 75 or maybe 74 and change, just cover it down there. Okay. Okay. All right. Dollar index. Okay, so here's your dollar index. Here's your 4-hour chart. This is what I drew out yesterday. I know it looks kind of crazy, but look, this support here, you see that support here? That is a 618 of this move here. Low to high. Okay. That's a 618 retracement. So that's why that support down there was so significant. Okay. We broke out here. Can delete that. This is if we are developing some sort of wedge. That's obvious resistance is 96.80. We wrote that out last week, like I don't know how many times, but a lot. Okay, 96.80 is key because if we break above that, this dollar gets instantly bullish. I don't know if we're going to break today though. I suspect that we might come back down to no. No, I don't want that. Hold on. Okay. Okay, so if we get a move like this, then you take that and you want to get long the dollar down there. That's the way I would try to play this if you can. Okay, so dollar should have support at 96, roughly 20. Okay, roughly, and we are in a range. Let's go over to the peso. I was a little ticked off about the peso on Friday. I played this so poorly. I mean, I really did. The late last week, I was long the U.S. dollar Mexican peso, a lot of it too, down here at 1822. I was long a lot, and I think I just got out at like 1830. I want to say 1835, 1836. So basically, I was long a truckload of pesos down here. I was actually targeting here. I was targeting there. I got out here like a pansy. Not only did it hit my resistance, it blasted through and hit 1860, which is our previous support. And so I totally wussied out of that trade. It was such a good trade. It was such a good trade, and I can't say it any other way, but I wussed. And but now I don't know what to do with it. And now it's like, okay, well, all right. So I missed that move up to 1860, which is obviously key resistance now. The question is, how far down here can we get to support? Because this may be it. I mean, maybe we hold at 1843. I'm hoping we can get back down to 1821. Back down. Let's just remove that. I'm hoping we can get back down here. I just don't know. I don't know if it's going to happen or not. Move back down to 1820. So today, 1843 is going to hold a support. Okay. Range. Let's go take a look at the Norwegian krona. We came out of this ascending wedge, and it's been holding up very, very well. I guess this is significant where we're at, because if we can break above 848, that would be very bullish. What's the high there? 848.70, so 849. So if we break above 849, that'd be extremely bullish. So I'm going to write that down. Okay. Support. I don't know if that's really support right now. I mean, that's support down there. I just think we'll find support ahead of that. But I mean, down. I don't know where support's going to be down here. I'm assuming we'll stop somewhere before here today, but if we come down, 833 is just big support. Okay, but that's down. That's pretty far away. Okay, let's go over to the Swedish krona. hoping for a dip, never got it. Things been, you know, pretty damn bullish. I think while we're above here, which comes in at basically 838, 61. I'm just going to write down 838 to 873, and just, I think you got to leave it alone. What was that? Oops. 838, 838, 873, and you just kind of gotta play the extreme ranges there. I don't think there's much to do right where we're currently at. Okay, so there's your bias chart. It is ready, and let me go ahead and take some of your comments. Whoops, why I didn't mean to put that up there. All right, Kimmy says, good morning, Blake. I think there's a bearish flag on the 1 hour. Kimmy, what currency pair were